this. Financial assets is basically my investments. And the only investment at this stage that is not into my own business is my fixed deposit. Okay, so can you see the amount? There's no amount next to financial assets, only next to fixed deposit. Don't worry about these amounts. I'll explain it later. Okay. Current assets. It's extremely important that you see the order. It starts with inventory, trade and other, receivables, cash. Why is that? It's always inventory, receivables, cash. Always. Why? We talk here about liquidity. Now, liquidity is another way in accounting to talk about cash flow. So, if you ask your dad tonight, "Oh, Daddy, can I please have tuck-shop money for tomorrow?" And he say to you, "Oh, darling, I'm so sorry, I am not liquid." Doesn't mean that he doesn't exist of Coke. He just Coca-Cola or Fanta. It just means he doesn't have cash on him. Okay. So if you are liquid, how many of you are liquid? Yeah, because you've got cash on you. Okay. So if a business is liquid, it means they've got enough cash to pay things so that the business can run. Okay. Now, if you look at, so now if they say to you, you know what, that guy went bankrupt, so they liquidated all his assets. What would that mean? They sold it. They turned his assets into money so that he can pay his debt. Okay. So now, why is it important that it's always inventory, receivables, cash? Because, can you see, this one, your stock, this is, inventory is literally your trading stock amount. Okay? Your stock is the furthest away from cash. So I've got my stock, I sell it to debtors. Can you see now it's a little bit closer to cash? And then the debtors pay, which is cash. So, the stock needs to be sold so that they can pay us. Okay? So it has to be in that order, otherwise I'm going to subtract a mark for placement. Okay. Now, inventory is your trading stock. Receivables, you only write the word receivables. So I want you to write for me inventory, receivables, cash. Okay. Receivables is your debtors control. Cash is more than one thing. What cash do we know at this stage? Bank, petty cash, cash float. Now if I go look at the note for cash, note number 6, they talk about fixed deposit. I'll explain that later. Can you see here they talk savings, bank, petty cash, cash flow. But next to bank they say debit. Can you see that? This means bank is a current asset if it is current. Ne? It's a current account. If I go to liabilities, my non-current is my loan. Ne? Because I pay back 20 years. Okay. Now, if I look at current liabilities, again, I want you to use the word payables, bank overdraft, short-term loan. Okay. Now, can you see payables? If receivables is debtors control, payables is creditors control. You see? Bank overdraft would be if bank has got a credit balance. So can you see your bank is going to be either a current asset or a current liability, depending on his balance. Short-term loan, I'll explain to you later. Okay, so let's just quickly go through again. Balance sheet, two sections: asset, equity, and liabilities. Okay, so basically this one shows me how I got the funds to run the business, and this one shows me, oh, where did I place the funds? That's as easy as it is, né? Because where do I get my funds? On my own, owner's equity, and through borrowing, debt. Okay, so assets, equity, and liabilities. Assets and liabilities divided in non-current and current. Current assets must be in the order of liquidity, from least liquid to most liquid. Liquid referring to cash. Okay? Current liabilities can be any order, they don't mind. In the end, however, it's very important that your assets equals equity and liabilities. Right.